Yeah, thank you, Paul. I quickly want to ask, it seems like for Paul it is absolutely clear already. Who of you thinks that Bitcoin is a threat to central banks? Please lift your hands. Okay, I see only like a third and somewhere like shaky. I'm looking forward to discuss this topic, and I welcome on stage Jude Ogene. And Charles Okaformbah. And Ndiaye. Welcome everyone. Let us go through. I would like you to introduce yourselves first, and also please give us an insight on what you're working on, and also, because I think we have some very Bitcoin backgrounds here, please also give us an overview, a rough one, on what you stand towards Bitcoin, your connection so far.
Sure. Thank you for that. My name is Jude Chidi Ogene, and I am the in-house counsel for Paxful, which is a sponsor of this wonderful event. Many of you, I believe, trade on Paxful, and if you aren't already trading on Paxful, you should. So, quick shout out. Let's see, the work that I do, again, runs the gamut of legal affairs that you would expect someone to work on at a P2P cryptocurrency exchange. But pertinent to this discussion, we have been working with regulators in various countries, in the United States, in Nigeria, the Gambia, other countries, to educate, to inform, and to make the case for if there is to be regulation, it should not be proscriptive, it should not be necessarily prescriptive, it should be informed and nuanced, and understand crypto is not a catch-all. I actually hate that term. And we have to talk specifically in the context of who we are, which is a Bitcoin first, peer-to-peer cryptocurrency exchange.
I just wanted to ask, when you say peer-to-peer cryptocurrency exchange, what are the coins that you have listed, and why do you choose those?
Sure. So we have Bitcoin, again, first and foremost. We have some Ethereum, and then we have stable coins, Tether, and USDC that has just recently come on board. And a reason for that is very simple. There's two reasons for that. The first is, as I've said, we're Bitcoin first and foremost. The second is, as a practical matter, because we are a US-based company, even though a lot of our users, over 4 million of our 11 million users are here on the continent, we're a US based company, and therefore subject to the U.S. laws and regulations, and there's a lot of uncertainty in the U.S. Regulatory space about what is and is not a security in terms of digital assets, and we just want to make sure we don't fall on the wrong side of that equation.
Mm-hmm. Okay, thank you. Charles.
All right, my name is Charles Okaformbah. I'm actually the CTO at Conversity. I'm from Nigeria, by the way. And what we actually do, we are a blockchain solution and consulting firm. We helped the government in creating some policies regarding the blockchain framework in my country, Nigeria. And also we have an arm that does that trains regulators and the police and some other arms in government on how to make use of the system that is blockchain, and also track when it comes to criminalities and all that in the space. Then also we have a solution too that is geared towards the CBDC, that's the e-naira in our country. We try to see how to improve the adoption of the government's CBDC. And then we also try to see how we can use the blockchain for aid distribution. For those of us that follow Nigeria very well, you know, during the 2020 COVID period, there was this issue regarding palliatives and it not getting to the beneficiaries. So we actually came up with a solution using the blockchain and also digital asset or cryptocurrencies that enables donors to easily track how they are donating aid to the beneficiaries from the donor to the NGO to the vendors that are meant to execute that down to the beneficiaries and all that. So generally that's all.
Very, and Abdul.
Hi everyone, my name is Abdoulaye, Ndiaye, and yeah, I'm an assistant professor of economics at New York University. I'm also from Senegal. I do research in economics, earlier on questions around public finance and growth and development, and also just over the last few years interested as well in Bitcoin adoption and also other questions around design of blockchains in general. Yeah, so I'm very passionate about this topic, so that's the short for me.
I think we have a very interesting combination here of panelists, as the two of you are from Nigeria, and Nigeria is the first country in Africa, as far as I know, that issued a central bank digital currency. And on the other hand, we have Abdou, who's originally from Senegal, and Senegal is one of the countries that is living under the CFA. So we have two different structures of central banks here. Abdou, can you maybe, for those that are maybe not too familiar with the structure, give us an overview of what the CFA is, what the central banks, there is two central banks, no, the one for the central CFA, the one for the Western one. Can you walk us through this setup and the function of those central banks?
Yeah, Senegal is part of a group of 8 countries and other 6 countries in Central Africa which use a currency called the CFA franc, which originally was, you know, a colonial money, that was its name. It was the franc of the French colonies, African French colonies, and this was introduced, you know, in the 20th century. And at the very beginning, this was what was used. It was really to compensate the French people who went in West Africa. Dakar was the capital of the former French colony, to compensate them for their work there. So the CFA franc was more valuable than the franc in France. So with one CFA franc, you had 1.7 French francs. So that was to compensate them so that they earn more because they left the metropole. And then over time, they changed the exchange rate in 1948 to be twice more valuable, so better for the French who left to do the colonial effort. And then in 1960, when the countries got their independence on paper, the exchange rate got changed. Now, the CFA franc you needed 50 CFA franc to have one French franc, which was the opposite. So complete change as soon as the people for whom this was created left. And then over time, there was the devaluation in 1994 with some issues around, you know, many countries struggling in the zone at the same time. And when the euro got introduced, there was just an exchange rate that was in place, and now it's essentially as if we have a fixed peg with the euro. So over the years, there have been a lot of movements saying that we need to get rid of this currency, that it's like a colonial currency, and that some people argue that it gives some sort of stability, but there is a lot of argument to be made in the fact that when you have a fixed peg with the euro and that, you know, your economy does not reflect what is happening in the European Union. So that's how this money works in terms of central banks there. They are not really central banks in the sense that there is not real monetary policy. It's more of an administrative role that they play. So I think there is there is question of also how can we make really economic policy happen in these places where it tends to be just mostly like administrative roles, whether it is, when you look at the Ministry of Economics, it's more about cooperation. How can we get more financing from the IMF or the World Bank rather than actual policy? So yeah, so that's overall the first thing I wanted to say.
The structure of, so you said that normally a function of the central bank is also to keep the rates at a steady level. How much influence do those central banks have, and how much are they actually bound to what the central bank in France is kind of dictating then, and how much does that limit the free, like the action of the central banks in Africa, and how much is that influencing the economic?
So with the fixed peg, with the euro, what the central banks essentially does is controlling reserves and buying and selling of those reserves to handle so that the private markets do not have a different price. Now, that's the main role that they do. Most of the other guarantees, France puts as a guarantee that they will be always able to convert the CFA to the exchange rate that was defined when the euro was introduced, which is still 655.957. Doesn't change. I think, there are many layers of questions around this. I think the question of sovereignty is the main issue. The economic question of whether we should have active monetary policy or not, I think people who believe in Bitcoin also tend to think that sometimes central banks have gone too far. So I think really in terms of thinking of central banks here in these zones, the angle where I see things going is looking at these reserves that they actually hold. And there is a case to be made because we have seen in places where there is sanction risk, and sanction risk is always a potential. When you have, we know and we hear it, the exorbitant privilege of the dollar being used in trade, you can be phased out. So many countries, in fact, that have had most sanction risk, you see the data that they have been holding more gold and also more Bitcoin and resilient cryptocurrency. So the idea of holding some fraction of reserves in alternative assets like that could be a good hedge against sanction risk and also contribute to adoption in general.
Jude, you're looking very thoughtful when Abdu is talking about these topics. What is your thought on how this structure influences the economic freedom and the sovereignty of those African countries living under the CFA?
Colonialism never really went away. It's still here. I won't even say neocolonialism, right? Because what good is it to have, in the abstract, one's political freedom, but your economic sovereignty is still tied to that of a foreign country? And the arguments, I think, started out, frankly, it started out as being punitive, right? So these foreign powers extracted a very huge cost from African countries to leave us to our own devices. And that cost was, in the form of the CFA, was every Francophone country had to deposit 100% of its reserves with the French central bank. How is it possible for you to have any kind of economic, or I was going to say economic independence, but any real kind of independence, actually, if that is the case? If 100% of your reserves have to be parked offshore with France. Now, in a show, I guess, of magnanimity, they've since reduced that to 50%. And they're talking about replacing that with a guarantee, although nobody's really given me, I haven't yet seen, an express timeline for the guarantee. And now the argument has sort of shifted a bit. Now it's no longer about, at least not expressly, being punitive. Now it is about, ostensibly, we are doing this to protect you. And it feels to me like the argument that a lot of museums in the West make about the return of looted artifacts, where they say, well, we would really, really love to return these bronze statues, these timeless pieces of art that we looted from African countries. We'd really love to return that to you, but we can't because it's, unsafe, it's insecure. We just don't know what's going to happen when we return those timeless artifacts. So we'll continue to hold on to them for you, just for safekeeping, you understand. That is essentially the same argument that is going on today, and that is, in a nutshell, why I think these foreign powers are so afraid of Bitcoin, because Bitcoin gets out from under that whole argument and the dependence on foreign countries. Yes, it may be the case, as Abdul says, that you need some sort of a peg, or you need to have your local currency indexed to something. But shouldn't African countries have the choice of what they choose to index to? I think it's...
Absolutely. When I follow up to this one, were there attempts of those African countries that are living under the CFA to issue their own currency, and how easy or difficult is it to exit this system of monetary suppression that we're currently seeing?
There have been attempts here and there. When ECOWAS was formed, there was an attempt to replace that with something with a common unit of currency. But the fact is, whether it's de facto or de jure, most African countries are effectively dollarized. And when, I just saw something from the IMF where they put out a report warning, and specifically Nigeria, against the risk of dollarization, which I thought was quite rich of them to warn us about the risk of dollarization, because when the IMF was created at the Bretton Woods conference, among other things, that's where they went on the gold standard. People talk about them going on the gold standard. That's a little bit of a misnomer. It was actually a gold standard which was priced in dollars. So it was effectively a dollar standard, because the US controlled at the time 2/3 of the gold supply and very much wanted to become the reserve currency of the world. And that has worked spectacularly for them. And so, and I say this as somebody who is Nigerian, I'm proud to be, but also American. And so I can speak, I think, to some of the shortcomings in the foreign and economic policy of the United States, and the ways in which those have undermined what would appear to be the express objectives of multilateral agencies like the IMF and the World Bank. But the IMF cannot, in good faith, be warning Nigeria and other African countries about the risk of dollarization when that was the whole point. Mm-hmm. The whole point was to dollarize African countries. And so it succeeded spectacularly. So there have been some half-hearted attempts, but in a situation which, and other people have spoken about it, I read Alex Gladstein's article in Bitcoin Magazine on the way over. I thought it was just a tour de force, and for anybody who has not read it, he did a brief presentation on it earlier today, but anyone who has not read it should please go out and read it. It's awesome. But in any event, the point is, you cannot decouple your economy essentially from the dollar and other foreign currencies when you are in debt. I was going to say to your eyeballs, but it's actually we're underwater. Yeah. Nigeria spends 102% of its revenue on debt service. And so when you do that, and your debt is denominated as it is in foreign currencies, there is no practical way to decouple yourself So these central banks are central banks, as far as I'm concerned, in name only.
Yeah, it is very interesting that you mentioned this, that even Nigeria has its own central bank, is issuing its own currency, but is actually not sovereign in its acting. Charles, can you, as said, Nigeria is the first country that is issuing a central bank digital currency, a CBDC, and you with your company, you are actually also looking into or you already issued a wrapped version of that e-Naira. But before we dive into that, can you give us an overview of where we are standing, who is adopting this currency, what are the measures of the government to make people use this currency? Yeah.
What we are presently witnessing is the adoption has not been the way the government envisaged, right? It has been slow.
When has it been issued? Can you also?
Huh?
When has it been issued? Can you?
When it was issued? Okay. So since the beginning of this year, we've been hearing about it, and it was issued recently, right? And after the issuance, the download of even the wallet has been very low. So what the government did was they tried to use a different approach in issuing the CBDC. So they made use of the banks, right? Using the banks as a vehicle to push out the CBDC, and then using the banks to gain customers for the CBDC. Now, the banks are kind of like confused on how to make use of this currency, that is the e-Naira. Now, the problem they are facing is somehow the central bank is serving as a bank, right? Is acting as a bank for the customers of the bank, right? So the bank is now like losing their reserve. So if I want to have an e-Naira now, I'll need to move my money away from the bank into the e-Naira system. So what that is doing is it's even moving money away from the reserve of the bank, right, with the central bank, and now the money is flowing from directly from the central bank to the users itself. And another question that the masses are asking is, how is it beneficial? What is the difference between the CBDC that has been issued with what the banks are already doing? That is the virtual currency that is just mirroring what you have in your bank and all that. So these questions have actually not been answered, and that is why we are seeing a low adoption of the e-Naira. So what the government is currently doing, recently the central bank has limited withdrawal, right? That is, you can withdraw a certain amount of money weekly and all that. So what they are trying to do is to push or enforce transactions to go digital, right? So, and once that starts happening, then the e-Naira, hopefully, they feel it's going to gain more adoption. Then also, if we're also looking at financial inclusion too, it's still far off, right? Agency banking is kind of like growing in the country. You have POS operators, even in the remote places and all that, kind of like helping out with transactions and co. So we are hoping, just looking out to see how that is going to change and also help people to come into the financial space.
I just want to read out briefly what you touched upon, because not everyone might have seen the news. So yesterday there was an announcement being made by the Central Bank of Nigeria that withdrawals at ATMs and point of sales are reduced to 20,000 naira a day, which is $27. for individuals and for organizations. So that is a weekly amount of 100,000 naira, which accounts to $135. For organizations, it lies around 500,000 naira, which they can withdraw in cash on a weekly basis. Everything above that has an additional tax of 5%. So this is one of the measures that the government is trying to, where the government is trying to push to an all digital, cashless society.
Yes.
Where do you see the threats in such a push? And is your impression that people living in Nigeria are aware of the threats that are coming with a fully cashless society? Because I can imagine in Nigeria, I don't know if there is advertisement from the government, but it will probably be very favorable towards a cashless society, being like, oh, this is seamless, and you don't have to file your taxes, they can right away be pulled from your account. Okay. How is the government framing a cashless society, and what do you see the threats in moving towards such a direction?
Okay, so before this present policy of limiting cash withdrawal, remember the government recently issued a new Naira note of 500, some new Naira notes, 500, 1,000 and go. And they asked people to return back the old Naira note. So all this is systemic, right? Trying to see how the physical Naira is back into their fold, and then they issue out their digital currency. So the adoption is kind of like low. The threats are there, but still, it still follows that same pattern of what is already on ground, right? Currently, even with the new e-Naira, there is a USSD system in place, right, where you can even transfer using USSD and all that. So the government is trying in its own part. For us, we are still, because we play more of like in between. We converse with those that are in the crypto space or the digital asset space, and then we also talk with government. Now, there is this negative perception when it comes to anything government, right? So those in the digital space or those in the digital currency space, they don't want to have anything to do with the e-Naira, not until the government came up with a ban, so financial institutions can't deal with the crypto space and all that. And that really affected the adoption of cryptocurrency. Just now that the trust for P2P is now increasing, and you see a lot of P2P transactions going on, right, in the space. So that is now pushing back adoption. So what we are actually looking at is, okay, is there a way to bring a middle ground, right, between those in government and those in the space? And one thing we also need to give to the government is there are lots of scams happening in the space, and there are also lots of bad players in the space. And the government is trying to avoid that, and that is why they are being careful. So for the users, they've not really seen any need for it, and also no risks yet. The only risk that we can see is just the devalued Naira, which the e-Naira is the same thing with the Naira. So if the currency is losing value, you want a way to hedge against it, and that is where Bitcoin comes in and other cryptocurrencies.
So the main issue you see is that the e-Naira cannot solve the inflationary problem because still the monetary base can be influenced by central banks. Abdu, what would you say, which risks are coming with the issuance of a CBDC and moving towards a cashless society when we're thinking about topics like censorship, surveillance, financial privacy?
Yeah. Great question. I think it's very important to preserve.
Move
it's
a bit
very important
closer.
to preserve the privacy that comes with cash, and any project that tries to digitize money should keep that as a principle. Now with the e-Naira, what happened was that in the papers describing it, they were promising that they would keep no need for KYC or for example,
No need for KYC?
for low
KYC.
amounts. But in the end, in practice, but for people who tested it out, you need to give your ID even for low payments, right? And so that makes it so that it doesn't have the features anymore of cash, that privacy. So I think it's dangerous. I personally think even if we want to have a more efficient payment system and so on, because in countries where institutions are not as strong, it can be used very easily as a tool. I can imagine that, for example, a political opponent, or not even that, but just like private citizens, could be used against them down the line, and those are the dangers of having, in a sense, some sort of centralized entity in the background, having this link between your transactions and your identity. And I think what really I appreciated in reading the first time the Bitcoin white paper is that it changes the model we have where your identity is known and the transactions are not, the transactions are known but identities are not. That can still allow for transparency and reputation, but it limit. The opposite way is what you have in many CBDC projects. We have China as well. And so now in terms of what should other countries do, I think that's where Bitcoin comes in. We talked about earlier about the CFA. One of the things I wanted to add is that since 2019, they said they're just going to change the name pretty much and get rid of some of the French involvement and change it into a name of ECHO. That project never started. There are just conversations. Okay, so I feel like people already can start using it and using Bitcoin. And like you see, this was not the case like a year ago when we were talking from these topics, but I see that some of the adoption is happening through having these circular economies where, like you hear we heard people talk about Bitcoin Ekasi, Bitcoin Mountain. There's also the beach in Salvador as well that everyone knows. It's like people using it within them, not only just as a store of value, but also as means payment. That is the way in which I see also how people will get involved, and that will show a case to central bankers that this is an asset that deserves its place as a reserve asset.
Mm. Jude, what would you say are the threats, or when you hear about CBDC issuance in Nigeria, are there red flags popping up for you? If so, which are those? And maybe you can already move to which of those issues could be circumvented with people in Nigeria using Bitcoin? Yeah, which advantages can Bitcoin bring here?
Sure, great question. So, for me, I don't know that it's so much an issue of threat, although I'll speak to that briefly, as it is something that Charles just said on this just a few minutes ago. He said, e-Naira is just Naira, right? I don't, so from that perspective, I find it hard to see what is particularly innovative about it. We had the banks, as you said, had digital Naira that we moved with some facility. If you have an Access Bank account, you can do all of that. But here's the other part of it. When I move money from my Access Bank account, somebody gives me their Stanbic or other bank account in Nigeria, and I pull it up, it automatically populates with the person's name, right? And so you get a lot of information, more information than you really should have. Sometimes you want to know the person's name. Sometimes you already know the person's name. Sometimes it's a friend. But if it's just a vendor, right, or somebody else with whom you're just having just the one transaction, one-off transaction, you might not want to give that person that information, which would say, this is my account number at thus and such bank, and this is my name. So I think that from that perspective, there are some downsides to the current system. To the extent that the e-Naira is a way to solve for that, more power to them. But I rather suspect that it's going in the opposite direction, and that you will find more centralization with the e-Naira. And that is precisely, to Abdul's point, that is precisely where Bitcoin can come in. Now, having said that, I think it's important to separate what are legitimate risks and what are not legitimate risks. And even after you say that, then I think you've got to say, well, what is the appropriate response to said risk? Because I agree, central banks, the CBN, has a legitimate interest in deterring fraud and scams. But it would be like saying let's proscribe Bitcoin would be like saying all these Yahoo boys in Nigeria using email to perpetrate scams, we need to just eliminate the use of email. And nobody has proposed to do that. I mean, it's a ridiculous approach to regulation. And so we've got to tailor the solution to the risk. If the risk is on a KYC AML level, let's talk about measures that can address that, where you can preserve privacy and still have robust compliance in place. And I believe that system is possible to an even greater degree with Bitcoin than with things like the e-Naira.
Mm-hmm. When you're talking about regulation in general, I think I read something from you where you were saying Bitcoin is an opportunity for African countries to leapfrog. But you were also telling me that one has to differentiate. Where do you see the opportunities for countries to leapfrog using Bitcoin?
Very good question, and please bear with me if I nerd out a little bit. So my point is that the thing that I've been spending a lot of time thinking and writing about for the past couple of years is this. I remember growing up in Nigeria, and every time we had to make an international call, in my case, I was making calls to family in the United States, you'd have to go to the local NITEL office. And you'd stand in a line, and you'd wait until it was your turn to make the call, and you'd get on the call, and maybe the call was supposed to be for 5 minutes. It would take so long to connect, and then you might have like 15 to 30 seconds to say what you needed to say before the line disconnected again. And then, of course, you have to troop to the back of the line and start the process all over again. You remember that, right? So that was analog telephony. We leapfrogged that to mobile telephony. Now, there are many things that are not optimal about mobile telephony. Everybody in Nigeria, I don't know if it's the same situation in Ghana, but it feels like everybody in Nigeria has 3 phones. When you sit down to do a meeting, phones start appearing from every place because somebody has a Glow thing, the other person has MTN, I have, 9 Mobile, but somewhere, among those 3 phones, we managed to get some semblance of coverage, and it's much better than trying to fix analog telephony. So we leapfrogged all of that in favor of mobile telephony. My argument is this: we have the same opportunity to do that in the regulatory sphere in African countries as it pertains to digital assets and things like Bitcoin, precisely because, unlike the US and other countries in the West, we haven't built up this elaborate Rube Goldbergian kind of system that over the past 100 years that are legacy systems that these regulators keep trying to force digital assets into. So, everybody in the US, the whole question is about, is a particular digital asset a security or not? And the reason they ask that question is because if it is a security, certain consequences follow. You are subject to the anti-fraud, anti-manipulation rules that are deeply embedded in the securities laws. Okay. They get there through the term investment contract, which is a term of art that was written into the 1933 Securities Act. Nigeria takes the position, NSEC takes the position that every digital asset is presumptively a security. But when I go to the Investment and Securities Act of 2007 in Nigeria, there is no term of art called an investment contract. It only references what you would understand to be your plain vanilla definition, securities, bonds, etc. So I think, frankly, to use an American expression, that NSEC is all wet when it comes to saying that digital assets are presumptively securities, because under their explicit laws, that's not the case. And I further make the argument that it should not be the case. If the reason a definition of what is or is not a security matters for purposes of anti-fraud and anti-manipulation rules, just simply say that every digital asset is subject to anti-fraud and anti-manipulation rules. Stop trying to force digital assets into a construct for traditional finance. And so we have the opportunity to leapfrog these outmoded, antiquated regulatory systems in favor of something that's much more nimble and much more attuned to what is happening in the world of digital assets today. That's my thesis.
Yeah, so there is basically a much more clean slate here.
Clean slate.
Where you can set up new regulation, whereas like in Western countries, it's already over-regulated and they're trying to squeeze in this new asset, this new currency, Bitcoin, into old structures. So.
And if I may, just very quickly, it's not just that they're just trying to fit it into old structures. There's also fights, jurisdictional fights between regulators. The commodities regulator says one thing, the securities regulator says another thing. We can avoid that.
Yeah. Charles, there is the saying of Mahatma Gandhi. I think pretty much everyone here knows it. I read it out. It's like, first they ignore you, then they laugh at you, then they fight you, and then you win. And when I look at the Bitcoin community, most people would say we're currently getting to the point where they start fighting you. Charles, do you think that central banks, especially the Nigerian central bank, is perceiving Bitcoin as a threat? And if so, which measures do you think they could take to fight the adoption of Bitcoin?
Okay, I'll start with that by just giving you a personal experience. So this happened to my mom, right? So during the COVID period, she was actually laid off and then given her gratuity. Now, she was like, okay, where do I put this money? Okay, the bank has advised her to put it in her T-bills, that Treasury bill, the Nigerian Treasury. Then the first month, she had it reduced from double digit to single digit. Then from there, almost 1% and all that. So, okay, remove this money, put it in Bitcoin. And that was the period Bitcoin actually shot up because we're in the pandemic and all that. Now, for somebody like my mom, right, she's already a believer. There's nothing you would tell her about investing in a government bond or any government security that she will want to believe that will earn her what Bitcoin has given her, right? So she is already a believer. Now, copy that and put it in the lives of the ordinary Nigerians or people that they want financial freedom, right? So Bitcoin, in a way, is already doing that. So there is nothing the government will say or there's nothing the government will do that will make people change their mind about investing or putting their money in Bitcoin. Now, we know the whole history is supposed to be a peer-to-peer electronic cash and order, but it has gone beyond that. Now, the government, not just the Nigerian government, just most of the governments that are working around CBDC. So they are forming like an easy way to exchange the digital government currency between themselves. So you have a decentralized digital exchange of CBDCs and all that. So that is one way the government is trying to see how to curtail the spread of digital assets, especially Bitcoin, right? Nigeria, there was this report that came out. The inflow, that's remittance, dropped drastically when the adoption of digital asset and Bitcoin was increasing. And the government was, okay, there's something happening where money is coming in, but we are not seeing this money, right? So for that, they are losing revenue. So all these are like ways of controlling the adoption, but people are already sold into the idea of digital asset and Bitcoin, so they are not moving. So the government will continue to find ways to tax it, right? Either maybe at the point of inflow or outflow, right? But still, we'll all come to a meeting point.
Yeah, it will, especially regulating inflows, outflows. It will be interesting to see what they're doing.
Exactly.
Abdu, on a personal note, what would you say is Bitcoin a threat to central banks?
Yeah, the
Which is
question
the-
we are discussing. So I think it's both a threat and an opportunity. You see, different central banks and different governments have tried different things. So China went all the way and said they're going to ban Bitcoin, realized that, in fact, you cannot ban Bitcoin. There are no more China validators, miners, but around the world people are using it and people can still use it. For many countries, I would say, will not relinquish their money printing capabilities. So in that regard, it's a threat for those. But I think for many countries, especially countries in Africa, it's an opportunity in the sense that, we already know we are in a globalized world, that the dollar is what we use for trade. And instead of just being a follower, there is, an opportunity here to say, okay, we talked about exit earlier. What is the exit? Is it trying to, every small country on their own, getting their own currency and, playing the roulette of, short-term monetary policy? That could be dangerous. We have seen cases of many countries, Zimbabwe, hyperinflation. Even from my co-panelists here from Nigeria, such a big country, an important country, in terms of economically in Africa, struggling, right, to deal with the monetary policy issues as well. Ghana, we see Ghana de facto is defaulting on their loans. They just announced that yesterday, and we have very high inflation. So I think for smaller countries like that, the solution is not to go this route, but rather think of more how can I embrace and be a leader in this, use Bitcoin as reserves. And to conclude, because I think we are at time, what I want to say also is that with this configuration where central banks will most likely play less of an important role, in my opinion, I think there will be also another form of decision-making, which is technology playing the forefront and having different technological platforms playing the role of central banks. And I think it's very important also, we can ask ourselves those questions of how we can avoid it to be just a new form of colonization as well, since we're talking about money as colonization. For example, it's very important within the Bitcoin ecosystem to have different people not just extracting or having bags, as we say, and hoping that adoption just makes prices higher, but think of how we can resolve the infrastructure issues, because in a sense, Bitcoin is a public good, adoption is a public good. There are still challenges. You don't have internet when in the farmer, how can they use Lightning? So I think the actors, the operators as well, the centralized exchanges, Lightning operators can also be part of the people funding this. And also within the developer community, having people from here, voices from Africa be heard as well. And I think it's a great example. We have met over the last few days Kalilu, who is part of the core contributors as well, to have many voices here heard, so that the new technological revolution that we have are not just extractive reconfigurations of the same centralizing forces. That was my last point.
Mm-hmm. Okay, thanks. As we actually already ran out of time, very, very brief one, Jude, is Bitcoin a threat to central banks?
It is, but it shouldn't be.
Short, brief?
Okay.
Do you want me to amplify? Okay, so really quickly.
Very brief.
Very, very, very briefly. The argument about is it a threat is predicated on we want to be able to control our monetary policy. My point is, You don't control it now. Effectively, other states control it. If you moved towards greater Bitcoin adoption and had maybe a peg to Bitcoin or adopted it as maybe as part of a basket of currencies, then at least you know that you're doing it with something that is stateless, that is designed to be decentralized and not so that you're not at the behest of a foreign country. Again, Bretton Woods is instructive. The US only agreed to a gold peg when they controlled 2/3 of the world's gold. And at that moment, you lost control of your monetary policy as an African country. So if you need to peg it to something or it needs to be indexed to something, might as well be Bitcoin.
Hello. Okay.
Great, last one.
Quickly. So for me, I actually see it as the Bitcoin system is just a parallel monetary system for the masses, right? So the government wants control, and the role of a central bank is beyond just issuing money, right? It goes beyond that. So for that role that they cannot control, they are scared, right? That is why they are bringing up all these other measures. But still, it doesn't affect the role or the main functions of central banks, which is causing inflation and all that. However, they want to manage the economy, that will cause that. But for the masses itself, they want a separate monetary system that they can easily use to do what they want to do. So it's kind of like not a big threat, though the threat is there, just like he said, but still, it's not that huge.
Okay, thanks for your words and time.
Thank you.